the moderator for this webinar. And thank you once again for joining us and taking your time to come through and learn more about the new exchange that is going to be developed soon, which is the Victoria Falls Stock Exchange. During this time, I'm going to allow and introduce our CEO, whose name is Justin Boni, to give us a brief update on the Victoria Falls Stock Exchange. So Justin, over to you.
Okay, thank you very much, Tapiwa. Anymore, if you could put the presentation for me, thanks.
All right, I'm going to be sharing the screen now. Are you able to see, Justin?
Yeah, it's there now. Okay, if we can make it a slideshow now. Okay, so first we're going to talk about the introduction to VFEX. So the Victoria Falls Stock Exchange, to begin with, is a subsidiary of ZSE. It's earmarked to operate from the Victoria Falls initially, and later on into a special economic zone. So we're actually going to have a physical office in Victoria Falls, where the exchange will be located. It is owned 100% by ZSE, and we have plans not in the long runs, but in the short to medium term, to have a technical partner. There are several reasons why we are looking for a technical partner. The first one is obvious in terms of getting skills and technology. The second one is in terms of the clearing and settlement. Initially, we're going to use the Reserve Bank as the settlement bank, but for the long term, we really want to have clearing and settlement being done offshore and not by the Reserve Bank. And then lastly, I think in terms of just getting more funding to make sure that this exchange is fully funded and that it can be successful. So why did we think of VFX? So we have been trying in the couple of years to get companies listed on ZSE. And what we've had quite a bit is in terms of currency stability. People have asked us to look to say that they're willing to come to the stock exchange, but they're looking for a currency that is more stable. And especially companies like in the mining sector who are looking to raise capital, especially to buy things that are imported, equipment that is imported. So hard currency capital was important. The other one was exchange control risk. We know foreigners have been complaining to us about the ability to repatriate money out. And it's one of the reasons that has caused, one of the reasons why fungibility became important, because people were getting money out through fungibility, which was an expensive way of getting money out. So we knew that we needed an exchange where it's denominated in US dollars, which takes away the exchange rate risk. And then we have to make sure that it's easy to repatriate the money out for foreign investors. Then the last one is in terms of the government, support government policy. We know government wants to do an offshore financial service center, and the exchange VFX will be the introduction of that. And we are working with the government to make sure that there are incentives that are going to be built in for market participants so that they too can be located in Victoria Falls. So I think it's something that we can talk to people if they want to talk about it, but we also want to talk to the government as well on that. Yeah, so I just want to tell you about the progress that has been done to date. So we now have a license, an exchange license from SEC. The license allows us to operate an exchange and also to do a depository and also to do the clearing and settlement. So we have that license from the Securities Commission. Our listing requirements have been approved. So obviously we have talked to the regulator about this, and there's expectation that as we operate over the next 12 months, there might be some tweaks that are required on it. So if there's going to be changes, we'll be open to people input as we go along for it to be tweaked as practice goes on. Then in terms of exchange control, there was an SI that was issued 196 of 2020. If you need a copy, we can make that available, which then did the exchange control around VFX, what will be allowed, including trading in US dollars in terms of the clearing and settlement and everything. So that's in. Then we have now our own depository system that we are testing with the market. The other thing that happened as well, which is to be finalized, is in terms of the tax incentives. So the tax incentives that were promised on VFEX were included in the midterm budget. Due to COVID, the Finance Act bill was not amended, but the government issued the draft. So the bill has to be go through Parliament. But the following incentives are going to, if approved by Parliament, are going to be part of VFEX. And the first one is that when you dispose shares on VFEX or depose securities on VFEX, there will be no capital gains. So it capital gains tax free, which is 1% currently on ZSE, and we think that is very attractive to investors. The second one is in terms of withholding tax on dividends. So the withholding tax on dividends is going to be for foreigners is going to be 5% instead of 10%. And we think that makes attractive as well. And the other one is in terms of VFEX itself. It's going to have tax-free status when it operates when it operates, which makes it attractive. I think if you want to get investors into it, because it's got tax-free status. So what's outstanding now for us to launch? We are close to launching now. The big issue is obviously getting the clearing and settlement correct. So we are working very closely with the Reserve Bank on that. There are 3 areas that we want to make sure that is covered in terms of the clearing and settlement. The first one is to make sure that the clearing and settlement in terms of ability for foreigners to come in and out is easy. So that's going to be important. The second one is in terms of the money that is raised on VFEX itself, to make sure that it's very easy to control that money. So when you raise the money, it doesn't get liquidated, for example, and it's available indefinitely to use as required. So that's important. Then the third aspect is in terms of local investors, to make sure that it's easy for them to participate on the market, and it's easy for them when they've participated for the money to come back to their account. So that's a thing that we are working on. Then I think the second one obviously is the testing of the system itself with the custodians. So that's mainly the 2 key things that are outstanding. So we are close, but we're just making sure that things work as promised. Okay, all right. So I think that's for me, Emma.
All right. Thanks, Justin.
Okay.
Thank you, Justin, for that update that you've just given. I'm sure everyone had questions, and from that update, some of the questions were answered. For those that have got questions, feel free to either raise your hand, or you can actually then use the chat to type in your questions. I'm now going to hand over to our Head of Business Development at the Zimbabwe Stock Exchange, who is Enmo Tariminga, to then give us the VFEX listing process. So whilst he's doing his presentation, also feel free to raise your hand or to type the questions. Enmo, over to you.
Thanks, Tapio. So I think Justin has given a summary of what VFEX is and the rationale behind it. The diagram just illustrates, I think, what is indicated, which will be the initial setup, what it looks like. So the participants or the key parties to the ecosystem, obviously the depository, which is owned by the exchange itself. The stockbrokers still play a part in terms of being the interface to the outside world, to the investors. The regulator remains our Securities and Exchange Commission. The Reserve Bank is coming in as a settlement bank, like what Justin indicated in the initial phase. In the medium to long term, we are looking at an option of getting an offshore settlement. Transfer secretaries will still maintain registers for issuers, and we are operating on a custodian model, which means that every investor that needs to come in or that wants to invest on VFEX will require both a stockbroking trading account and to also have a custodian. On VFEX, what I can just highlight is that these custodians will be purely bank-owned. In other words, we are not going to be operating for now stockbroker-controlled custodial models, but it will be the bank owned custodians that will provide that facility. Let me move on to the gist of this seminar, which is the listing process on VFX. So Justin has already indicated that our listing rules, we have got them and they were approved by the regulator. And just to highlight that I will not be going line by line or in detail in terms of the whole listings requirements, but I'm going to focus on key areas which I think will be of interest to someone who wants to actually apply and be an issuer on VFX. So,
sorry, Enmo, can I just interject? I'm seeing that there are questions.
That's fine.
If you're able to assist. So, Martin is asking, what's the difference between trading partners and sponsors? That's the first question.
Okay, just to highlight that as well, from the ZSC, I think we have got our head of trading, who is also part of this meeting. So if there are questions that may pertain to that, I may have to defer to him. In terms of the difference between a sponsor and a trading participant, so it's something that is already on, if you look on the ZSC rules, Statutory Instrument 134 of 2019, when we introduced this concept of separating trading rights from sponsoring rights. A sponsor is an advisor to either an entity that wants to list or an entity that is already listed. And the advisory scope is in terms of that company's compliance with the listings requirements. So what the exchange does is that when you want to be listed, you have to appoint an advisor, and that advisor is what we are calling a sponsor. That advisor is expected to help you to know how you go about listing. What sort of documents do you need to produce for you to be admitted to listing? So it's an advisory role. Whereas a trading participant is an agent that connects you to the secondary market. In other words, you appoint a trading participant for you to buy and sell shares that are listed on the stock exchange. They also offer advice, but their advice is mostly, if it's in the context of trading, is to do with security selection or advice on which securities you can buy or which securities you need to sell. So those rights are differentiated when it comes to VFX. So you can be a trading participant, but without the advisory roles of the companies that actually want to come and offer securities on the platform. And you can also be just a sponsor, just an advisor to companies that want to list, but do not necessarily have trading rights when it comes to the buying and selling of those securities. So the difference that a sponsor is actually an advisor in terms of the VFX listings requirements, whereas a trading participant is your normal stockbroker. So it's just a separation of those rights. Any other question, Tapio?
I think for now, what I'll do is I'll take note of the questions, and then during the presentation, I can just interject a bit, because some of the questions, I think you might answer them as you go through the presentation. So you can go ahead.
All right. So I was highlighting that in terms of the VFX listings requirements, in terms of the model of the rules, we adopted the rules that we currently apply on the Zimbabwe Stock Exchange and modified them a bit. And the reason why we chose the best as the ZSC listing rules is that we felt that the ZSC rules as they are now are a good regulatory framework. We derived them actually from our JSC listing rules, which is rated highly in terms of regulatory strength in the World Federation of Exchanges. So we do have a robust regulatory framework in terms of the listing rules. What we only did is to modify them a bit to make them more flexible in terms of application from the VFX perspective, and to make them also a bit more friendly to the issuer and to the applicant that may want to participate on VFX. So some of the changes that you'll notice that apply on VFX listings requirements is one in terms of publications. So you in issue will have an option to either do it in print or electronically. So we are moving towards electronic or digital publication of notices, your announcements, your financial statements. You will have an option to publish them electronically. That is through your website and through the VFX website as well. If you do choose to publish in print, that will be an option. It's now no longer mandatory to do press releases on some of the announcements. What we have also added to the VFX listing rules is the power for the listings committee to have flexibility in terms of applying the rules. And I'll explain this in the next slide, what that flexibility means. But basically what we noted is that when the rules are gazetted in the statutory instrument, it's sometimes difficult to then move away and apply reason where it's probably required. And that was a bit an area of concern with the current rules. So we've made a decision to say, for example, where we insist on 5 years audited financial statements for an issuer to list. If you were to apply the spirit to the letter, you would then probably prevent someone who has got 4 years history or who has got 3 years operating history, but who may have a great prospects in terms of listing. So what we have made this provision to get more flexibility in terms of how we are applying listing rules. Then just to add to, I think, the question on the sponsor and the trading participant. So we've also made it clear in the VFX rules, if it were dropped the tag sponsoring broker, because I think that was one area of confusion, to just a sponsor. So we have made it quite clear that they are sponsors and they are trading participants in the VFX rules. Then we've also made it a bit more easier for issuers to also directly be in contact with the exchange in as far as routine notices are concerned. So it's not all notices that you will then be required to put through to your sponsor, and then the sponsor then submits them to the exchange for approval. In certain circumstances, the issuer is free to directly be in touch with the exchange, especially on notices that are routine, like your annual general meeting notices, where you have got changes, be it director or senior management. You don't necessarily have to pass that notice through a sponsor. You can pass that notice directly to the exchange for approval. Then what we have also changed a bit and of importance is the requirement for issuers to rotate their auditors and partners. So in terms of the actual wording, it says that an issuer will not be permitted to continuously engage one auditor or the same partner for consecutive 5 years within an 8-year period. You are required to rotate your auditor and the partner, and the maximum period that you can actually continuously have the same partner or auditor is 5 years. And the 8 years is to ensure that you actually have got a cooling off period. So within 8 years, you cannot, so after 5 years, if you have been appointing one auditor for 5 years, you cannot reappoint the same auditor until after a 3-year cooling period. That's what we have put in the rules. Then to emphasize the point that I said, we'll talk about the issue of the flexibility. So we put this provision in the rules, which says that we want to emphasize that the listing rules are not exhaustive. So we do encounter scenarios as an exchange that sometimes are not covered adequately in our listings requirements, and it may be difficult on how we actually handle those scenarios. So to make it more flexible for both the issuer regulation and our listings committee to handle those scenarios that are probably not covered adequately in the rules, we've made it flexible to say that these rules are not exhaustive, and where necessary, we may impose additional requirements or make a listing subject to special conditions. So an example, the example that I gave to say, ordinarily an applicant has to have 5 years operating history for them to be admitted to listing. But there are certain cases where perhaps they merit listing and they've only been operating for less than 5 years. The listings committee would have that flexibility to waiver that and actually admit that entity to listing. I think I just wanted to emphasize that point, that we have added this to provide those that are in charge of the listing rules the flexibility in terms of application of the rules. Then Going forward to what would be the initial requirements. So these are for a person of an entity that is applying to list on VFX. Take note the flexibility that I hinted. These are not cast in stone, but there is a requirement that an applicant should submit their application through a sponsor. So that one, unfortunately, is not going to be waived. When you apply for a listing on VFX, it has to come through a sponsor. And then the applicant has to prove that they're duly incorporated if they're a company, local company, that will be in terms of the new companies and other entities at other business entities act. If it's not a company, it has to prove that it was validly established. It may be a parastatal, so it would have established by virtue of an act of parliament. So the constitutive documents will have to prove that. Then in terms of the minimum subscribed capital of an applicant, it has been put at USD 3 million. And the number of corresponding shares, if the applicant wants to list shares, the number of minimum shares that would have to have that constitute that capital should not be less than 10 million shares. It has to show us a satisfactory profit history for the preceding 5 years. And in terms of the free float, we have maintained that at 30%. However, if you do a private placement before application for listing, the free float will be 20%. So it's 30% if you are coming in either as an introduction or as an IPO. But if you do a private placement just before you list, the free float is reduced to 20%. Minimum number of shareholders on the main board currently on ZSC is 300. We have reduced it to 50 on VFX. And then for those that are on currently listed on ZSC, and this is what was also contained in the statutory instrument 196 of 2020, the exchange control guidelines that were published. An issuer on ZSC will be permitted to list on VFX, but if they want to maintain their listing on ZSC, the maximum they can list on VFX is 20% of their authorized capital. And the second requirement is that the securities which they bring there will have to be of different class. So if you have ordinary shares listed on ZSC, when you want to have some part listed on VFX, you'll have to issue a different class of securities on VFX. So probably a class B shares will have got different rights to the shares that are listed on ZSC. The reason for the requirement to have a different class of shares or different class of securities is to prevent the calculation of implied exchange rates. So the class of securities has to be different to prevent that, because it has been an issue of concern to monetary authorities. Okay, then moving on to the methods of listing. So the methods of listing that apply on any other normal exchange will apply on VFX. In this presentation, I'm only going to cover 3 and to just highlight what will be required for each. So the most common one that we've been encountering on the current ZSC is the listing by introduction. So this applies where an issuer does not really need to raise new capital, and they already meet the minimum spread of the shareholding that is required. So normally there's no advertising, there's no marketing of the issue. It's just an application that they send to the VFX. What is, however, required is if you're coming in and want to list by introduction, is that there has to be an undertaking by the applicant that there is no pre-existing intention by the holders of the current securities to dispose a material number of their securities in the next 18 months. So this is to prevent, companies that may want to, or sponsors of entities that may want to come and list, but probably the intention is to actually find an exit method, liquidate their holdings and move out. To also ensure that the stability of the entity as it lists, the founders or the sponsors of the entity have to be committed to be part of the entity for at least 18 months before they are allowed to exit. Then in terms of the documents required, and this is not exhaustive, if you, I think very soon we'll be putting up the VFX website and the listing rules will be available, but we can also share the copy of the rules that have been approved, and you can see in detail the documents. But these are the key ones: the formal application, which has to be compliant with the first schedule rules. So there's a format which you have to adopt when you are making that application, and it's clearly spelled in the first schedule rules. Then the pre-listing statement, you can call it a prospectus or the placing document, is also important. Then the constitutive documents, which are your listing particulars. So your memorandum, your articles, you also have to submit those, and they have to meet the requirements of the exchange. Then there's also something that is important, a general undertaking in the form of a board resolution. So this undertaking is by the company to say, we are applying for the listing and we undertake to abide by the listings requirements of the Victoria Exchange. And there's also a format that is prescribed how that is actually worded in the VFX listing requirements. Then if there are any experts, your reporting auditors, your legal advisors, your financial advisors, any independent financial advisors, your sponsors, you have to prove that they've consented to that listing and whatever work they undertook for you to list, and they have to provide copies of the experts' consent letters. They have to be accompanied that application. Then the other method of listing that can be adopted is a placing. So a placing is where you actually market the securities, but it's for a closed subscriber base. So it's not a public offer, but it's where you probably, it's also called a vendor placing, where perhaps you just target, institutional investors. So perhaps you target pension funds to say, my target is to have 5 million, and instead of going public, perhaps I just target the top 10 fund managers or top 10 pension funds. So it's a placing where you target a certain specific investor base and not generally the public. So with this one, I've just highlighted, so all the documents from an introduction apply, and in addition, you have to also accompany that application has to be accompanied by a statement on how you actually intend to achieve the shareholder spread, and the placing document as well, because the placing document is not a public document. So when you apply for listing, it's only a document which you have prepared for that target market. It has to accompany the application for listing to say, this is the document that we're actually using to, target the vendors or the particular segment of investors that we want to come on board. It also has to apply to accompany that application. Then the other method of listing, which is the most preferred and usually used when an entity wants to raise capital, to raise money, is the offer for sale and offer for subscription. So it can be two parts. It can be an offer to current shareholders. Normally, if a company is listed, it can do that offer to current. So it's not a rights issue, but a company that is listed elsewhere can simply say, we want to list on this new exchange, but these shares are only available for subscription by our current shareholders. It's quite permissible. So it's called an offer for sale, and you're only offering either to your existing shareholders, and it's normally done when the company is already listed, so it has to come by way of the names of the offer. The alternative is, if it's not listed, it becomes an initial public offer, which is then taken to everyone who may have an interest. The additional requirement for this type of listing is that it has to be underwritten. So where you want to publicly raise funds or to do a renounceable offer to your existing shareholders, the other requirement is that that offer has to be underwritten. So you have to appoint an underwriter for it. And in terms of the rules, it actually says the company must undertake to disclose that they've done due diligence on the underwriter and are quite certain that it has got sufficient funds to underwrite that particular issue. So the additional documents for an offer to the public is the original copy of the signed accountant's report and the relevant consent letters. We also then need to see the underwriting agreement. And since it's going to be a new issue, if there's any plan for price stabilization, then the details have also got to be disclosed and accompany the application for listing. So those are the three methods that I thought we could just highlight that you can utilize to actually list on VFX.
Hi, sorry, Enmo, maybe before you move on to the next section, maybe to just go back to some of the questions that that were coming through.
All right.
Okay, that's fine. I think this was touched by Justin, but someone was asking what is the expected or estimate date of launching for VFX?
I'm not sure if Justin is still around. Perhaps he can take that one. Justin, are you around?
There's Robert. He can assist on that.
Yeah,
Justin is there, so I think we can take
yeah,
that one.
Yeah, so we are working. It's very close now. So in the next few weeks, yeah, we'll be making an announcement. Because what we need to do is once we've got the clearing and settlement done, we'll then apply to our regulator to approve. So in the next few weeks, it's very close.
Okay.
Thanks, Justin. And then Enmo, another one. Someone was asking if we've managed to review down the custodial fees.
Right. So I think that's on the settlement side. So my colleague from the depository is not on this meeting, but I do know that in terms of this year, we actually waiving, that is for the custodial participants on the depository side. They are not going to be charged. Perhaps if they've got a particular area of cost, is it from a trading perspective? Perhaps on the trading perspective is like we indicated, that's the area that we're actually at the moment discussing, and we are discussing with the custodian that will provide that service. So it's on the custodial side, the charge to the client or to the investor. That is too under discussion. And I think once the items are actually finalized and the rules are finalized, they'll actually be made public. But as far as the custodians themselves participating on the platform, for this year, we're actually waiving the fees. And they only pay a discounted fee from next year. I don't know, Robert, if you want to add, if you're on this meeting.
No, I think you are right in terms of that view. We are still in discussion with the custodians. And I think once everything is agreed, we'll then communicate with the market.
Okay, thanks. Tapio, any other question?
Okay, there was another one. Someone is saying that you had mentioned that RBZ will facilitate the clearing and settlement in the short run, but going forward, it will be facilitated offshore. Are there any partners who have been nominated for the offshore settlement, and what is the main reason for having an offshore settlement and clearing facility?
Okay, I think Robert can answer that one.
Okay, what we are doing currently, we are still negotiating with people that we are engaging, and at this stage, maybe it's not prudent to just indicate who we are talking to, but we are in discussion. Then the second party, why we thought the offshore settlement is route. What we are trying to do is to give confidence in terms of what we are trying to do. We are trying to ensure that at least foreign investors, when they come in, when they come in, they have an exit route. So the route which we have taken for offshore settlement is just to enhance the confidence and making sure that we are in a position to remit sale proceeds if they are there, the capital and the capital appreciation and the dividends will we have to be remitted outside. So just enhancing the confidence.
Thanks, Robert. The other question, Enmo, was they were asking about how about for the shareholders who don't have access to internet, they won't be able to receive notice. I think you had mentioned something earlier in your presentation.
Look, maybe I can help. I can come in. Basically, this is going to be a digital exchange, and the view is that in a digital exchange, everything is going to be filed electronically. The trading, any updates which are going to come. So effectively, from that perspective, then if you don't have internet, then it becomes difficult to participate. But you are also looking at an issuer who is, say, in another jurisdiction, and this issuer is publishing notice. Where are they going to publish the notice? So our view is that the digital platform that we provided is the only tool which will ensure that everyone across the globes will be in a position to at least participate.
Thank you, Robert, for that. Enmo, I think for now, those were the questions, so you can proceed to the next section.
All right, thanks. I think just to add on the digital one, so I think one of the areas of pain also for issuers is that compliance costs, and especially the printing publication costs, they are quite significant. So assume we have got one of the companies that listed on the ZSC, which I know has got more than 80,000 shareholders. So currently the requirement is they have to send an annual report to each of those shareholders. Just imagine the cost of printing more than 80,000 copies of an annual report and the cost of posting it. So the digitalization is also reduce the compliance cost for the issuers. So where the items can be sent electronically, it lessens the burden on the issuers. But we do take note of those concerns, but it's also meant to lighten the burden on potential issuers. I'll proceed on the listing scenarios. So we have already covered one aspect where we indicated that for companies that are currently listed on the ZSC, there's a requirement to just ensure that they bring in new securities. But to just expand it a bit further, to look at two scenarios. So one, we look at the scenario where we have got both a local, in terms of the SI, it's called a resident firm, which is listed on the ZSC, and we have got a foreign or non-resident firm that is listed on the ZSC. So the first scenario is for companies that are currently listed on the ZSC. So if it's a local firm listed on ZSC, what it means if they want to come on VFEX is that they are only allowed a maximum of 20% of their authorized capital, and they have to issue new securities on VFX. And I explained that the reason for that is to prevent implied exchange rates being calculated. There's an option, however, where if they don't want to maintain dual listing, they can delist, but our intention, and I will emphasize this, that it's not to have companies delist from the ZSC and migrate to VFX. We prefer a scenario where we have got new listings on VFX to also deepen and broaden the markets. But listing remains voluntary, and companies can actually voluntarily delist as well. So where companies delist from the ZSC, they can then list 100% on VFX. And this can be done by either an IPO or an introduction. So where you are maintaining a listing on ZSC, it means your choice of the listing method also changes. And introduction will no longer be possible because you have to bring new securities. So essentially you are bringing, it can be an introduction, but it will have to be of an entirely different class of securities. Then for foreign companies, the non-resident firms that are currently listed on ZSC, these have not been prohibited from listing 100% on the other side. But practically, what it means is that there's a requirement on ZSC to maintain a free float of 30%. So for them to continue complying with to remain validly listed on the ZSE, practically what it means is they can only bring 70% of their authorized capital to VFX and maintain a dual listing on ZSE. But the catch is, if they come on board to VFX and raise new capital, there is a mandatory requirement to reinvest 20% of the capital raised within 5 years from the date of raising that capital. That is for foreign firms. The foreign firms can also then delist from ZSE, but that requirement to reinvest 20% of the funds will still remain, whether they bring in 30% to VFX or they list 20% on VFX, whatever new capital they raise, they have to reinvest 20% of it within Zimbabwe and within 5 years from the date of raising that capital. We'll proceed to a scenario which looks at companies that are not currently listed on the ZSE. Right, for new applicants not currently listed on ZSE, so this can also be subdivided into either a local firm or a non-resident firm. For local firms, that requirement to limit to 20% then falls away if you are not currently listed. So you can apply to list 100% of your capital on VFX if it's a company that is currently not listed on the ZSE. And the choice of listing can be any of the 3 or more that we talked about. For foreign firms, they can also list 100% on VFX. But in terms of the SI, that catch to say reinvest 20%, it's actually silent on that. But our interpretation is that it may be silent, but there may be, let's assume you raise all of the money from local investors. I think there may be, perhaps Justin, you may guide me there, or Robert, but in terms of the SI 196 of 2020, it's silent on firms that come as new entities. The requirement for 20% applies if you have listed or you delisted within the previous 5 years. But where you are coming in as new, it's quite silent on whether that requirement to reinvest 20% will apply. Robert, I don't know if you have got any thoughts on it.
Sorry.
You're breaking, Robert?
No, I'm sorry. I'm saying I didn't. What is it that you want me to clarify? Sorry.
Or to say for foreign firms that are currently not listed on ZSE, that are coming in as new applicants to VFX. In terms of the SI 196, it does not say they have to reinvest 20% of their capital. It's quite explicit.
It doesn't say.
Okay, so we take it that there's no need to reinvest.
Yeah.
Okay, thank you. Right, I think those are the scenarios that we wanted to highlight in terms of the 2 scenarios. Now, coming into the fees, these are the fees that are going to apply, and we've put a comparison between the current fees on the ZSE and the fees on the JSE. So these are United States dollars, and they're excluding VAT. The application fee for a new entity. So these are to review and approve the documents that you submit for listing. So the articles, which are your listing particulars, it's $500. If it's a debenture trust deed, it's $500. If there's a share option scheme that you intend to do for your employees, that will also be another $500. Then the main circular itself, which is the pre-listing statements, prospectus, it's 5,000. And then if it's an ETF, it's the same fee. Re-examination of articles, so assuming you submit and you need to resubmit your documents, there's also a charge for resubmission of those documents. Then if it's an ETF that is linked to a particular index, the exchange will also need to review the index ground rules that govern the ETF, and the fee is $200. We have tried to make it competitive. So if you look at the JSE, which is the biggest exchange in the region, it's probably about 4 times less. We only on the smaller documents, more or less similar on the actual listing circular, where on the JSE is 5.1 and we are 5,000. Then in terms of the initial listing fees, and we've also put some comparative exchanges there. The initial listing fees, and again, that these are exclusive of VAT, where applicable. It's 0.05% of the value of securities to be listed, and they are subject to a minimum of United States dollars 2,000 and a maximum of 15,000. So the comparative markets there, in terms of the initial, is the Stock Exchange of Mauritius, which seems to charge a flat fee of 5,000. The JSE is divided into bands, about 22 bands, with a minimum of about $85 to a maximum of about 177,000. Then we have got the Cayman Islands. It charges a minimum of 10,000 and a maximum of 20, and then the current fees on the ZSE are between 4.6 and 27,000. That is if we convert the local currency fees at the exchange rate that was ruling at the time they were published. So the essence was to try and make the listing fees more competitive, especially if you look at the exchanges that we are trying to benchmark with, the JSE, the Stock Exchange of Mauritius. Then in terms of the document approval process, so this has also been quite made
Emo, before you go to that process, can I interject? There are about 2 questions or 3.
All right.
Okay. Someone was asking, how soon can we expect derivatives on VFEX, given that Zimbabwe's mining and agricultural background?
Fair question. So that one, yeah, it's a strategic question. In terms of the VFEX listing rules, currently they don't provide for derivatives. And in terms of the infrastructure as well that is being put in place, it's not yet ready for derivatives. What we would need is to have a clearing house that then manages, you know, the day-to-day margin maintenance funds. But in terms of the Act, the Securities Act, derivatives are securities, eligible securities that can be offered in the local capital markets. So really the work that is cut out for us as the VFX to work on the rules that will govern the listing of derivatives and put in the infrastructure to also then facilitate their trading. Timelines, I may lie, perhaps if Justin is on board, he may guide me in terms of that one. Justin, are you still around?
Maybe what I just wanted to add before Justin comes in, if he's still around, is to say, if you look at the trust that we have regarding the offshore and onshore settlement, the threat is obviously to take into account that at some point we are going to do these derivatives. And at that point, we then need infrastructure which is in a position to handle this. So our need to have a strategic partner in the process, we obviously will be working towards having some of these products coming on board. So we are cognizant of the fact that, yes, we require those instruments, but we believe it's the second or third phase in terms of the approach that you are taking, that, okay, if we get a partner on board first with helping us on the infrastructure and the skills in terms of setting up the clearinghouse, it then puts us in a very good position to then launch this product.
All right, thanks. So I think to the question, we really don't have a date yet on when we'll have derivatives, but I think the outline of the project is that the next phase for us is to look for a technical partner whom, as just indicated, is also going to bring in skills, the technology, and the financial muscle, which will be required for that exchange to offer those complex securities. So I would say it's probably premised on how soon we can get a technical partner, and then perhaps strategic wise as well. When you get an equity partner, the strategy then also has to incorporate, what that technical partner is also bringing to the table in terms of their own strategic view. But we take cognizance of the need for those securities to actually be on the same competitive platform as the exchanges that we are benchmarking to. So in terms of timelines, I would say not exactly specific timelines, but the path is the next phase. We get a technical partner, and then we take it from there. Tapio, any other question?
Yes, for this one, let me allow Crystal to actually unmute her mic because she had about 2 or 3 questions, so that maybe she can then ask. Crystal, are you there? You can unmute your mic and ask the question that you raised on the chat.
Thank you, sir. My first question is, if you do a direct capital raise via rights issue on the Zimbabwean or the Victorian Stock Exchange, how easy is your cash that you raised? How easy is that accessible? Will it also be held back? And the second question is, if you raise capital on your primary listing market, which for instance is a JSE, is that by default also triggered by the ZSE to raise the capital? Can those shareholders participate in that? And if so, how easy accessible is that funds as well?
Okay, I didn't get clearly the first one. I sort of got the second one in terms of the accessible, if it's a rights issue.
Let me read out the first one, Enmo, for you. She was saying, if you have a secondary listing on the ZSE and migrate to VFEX and raise capital, will you be able to access the capital raised immediately?
Okay, then all right. The second one?
Second one was, if you raise capital on the primary market, in case of a rights issue, what will the secondary listing at the ZSE or future VFX automatically follow as a point of access for shareholder to participate?
Okay, all right. So if I got it, in terms of capital accessibility, this seems to talk to the liquidity of the platform. Without having operated the exchange, it may be difficult to really ascertain. But we are looking at people that or institutions that are likely to participate. And our belief is that we have traded in hard currency before. So the period from 2009 to about 2016, I think 2016 is when we had then the introduction of the bond note. So that period from 2009 to about 2016, for us, it was pure United States dollars. And as the current exchange, we traded quite significant amounts of it. I think at a peak we had about 485 million. That's an annual number, which was more than $1 million worth of trading per day. So it was quite liquid in the United States dollars. The reason why we have moved to sort of a special economic zone and are looking at all these exchange control exemptions is to try and recreate an environment that suits the foreign investor as well as the local investor. So if we get the permission to make capital freely move in and out of the exchange, we think it will be liquid enough to support both primary market and the secondary market. So unfortunately, we have not yet operated so to then say we'll achieve so much. That may be difficult, but we are quite optimistic that we have traded hard currency before. And we think there's enough appetite for the assets that are going to be on VFX to contribute or to stimulate significant liquidity for an entity to actually raise capital. Then the second aspect, I think, relates to whether if a company is listed on ZSE and then it moves to VFX, whether the shareholders on ZSE can participate in a rights issue on the other side. So my first submission was that the securities that you bring as the secondary listing to VFX are going to be different from the securities that are currently listed on the ZSE. So the security holders on VFX will be different from the security holders of the securities listed on the ZSE. So the participation, if it's a rights issue, will only be eligible to the security holders on the VFX register. So there will be two different registers in this case, because the securities will be different. So assuming you've got ordinary shares listed on the ZSE, on VFX, you're then going to list Class B. And the Class B shares, if they do a rights issue, it will only be the Class B shareholders who will be able to participate in that rights issue. I'm not sure if I get the question correctly, but that's how I felt. Perhaps it was.
Yeah, maybe I can also add just in terms of accessing the money. The provisions that are contained in the SI allows, especially a local company, to open offshore accounts, but obviously subject to approval. But immediately when the money is raised, the institution, the issuer is able to access that money immediately. And like Enmo said, these don't have the other requirements which are ordinarily put on other accounts currently operating in the market.
Okay, thanks for that, Robert. I think I've got a slide, I think, that also talks about the funds flow. Yeah, so Robert is right. We'll touch a bit more about it, I think, in the next couple of slides or so. I'm not sure, Crystal, if you are there, if you are answered.
Yes, I'll maybe put this on a question separately to the ZSE at a later stage. It's just actually for my own benefit, but thank you so much.
All right. Thanks, Crystal. Tapio, can we proceed?
Yes, we can proceed, Enmo.
All right, so for those that are already listed, this is not something new, but just for the benefit of probably participants that may want to know the document approval process. So when we say a listing is approved, basically it's the documents that you submit that get approved. So the process involves you at the early stage. The recommendation is get in touch with the stock exchange and submit your documents early and pay the required inspection fee or the document review fee. Then the next phase is you get comments. So normally you submit your documents, the issuer regulation department of the stock exchange will review the documents and then they will give you comments on those documents. Work on the comments from issuer regulation, then you resubmit the documents again to issuer regulation. And then once the revised documents meet the minimum requirements that would have been specified, they are then forwarded to the listings committee. And the listings committee is a board subcommittee. So it's a board subcommittee that actually has got the power to either then approve or deny that application that would have been sought. If approval is then granted, the only other leg would be for the sponsor to then submit the final set of documents to the VFX before they are publicized. So it's a very straightforward process. Early submission of documents, you get your initial comments, work on the comments, resubmit. Once the comments meet whatever was specified, then the documents are forwarded to our listings committee. And our listings committee sits on a monthly basis, but where there's need for an ad hoc meeting, it can sit. So the turnaround time is actually quite short. At most, you are looking at a month if you get a feedback, but in most cases, the feedback is obtained in a short space of time. Okay, timetable offer, this is just the straightforward timetable. It was just for the sake of entities or participants that may not be familiar with the exchange, but for seasoned issuers, This is not new. So this is a timetable that normally applies for an offer for sale where you are going out to raise funds from the public. On day 0, you publish your statements. You publish your documents that have been approved by the ZSC, and on the same date the offer opens. You get 21 days. It's a minimum. You can actually extend the offer period. So after 21 days, the offer closes, and then we expect within 3 days from the closer, from the offer closing, to get the results submitted to the VFX. So if it's an IPO, you then submit what was the subscription rate, how much did the underwriter then take in terms of that offer. You submit those to the VFX. 3 days later, you can then publicly announce the results of the offer, and in about 4 to 5 weeks, the securities are actually then listed. If there was an excess in terms of the subscription, depending on the policy or the oversubscription policy that would have been contained in the pre-listing statement of the prospectus, either refunds can be made or a green shoe option can be then taken, where you actually issue or offer more securities to cover for the oversubscription. It was just to guide new entities. So the timetable also differs depending on the method of listing chosen. For an introduction, it's much shorter. For a placement, it can also be, it's also quite shorter. The listing process, I think I've already talked about it. So initially, engage the VFX early on if you intend to list, and that can be done before you actually appoint any professional advisors. So we will actually entertain you, give you some guidance, then you can go on to appoint professional advisors who will then assist you to prepare the listing documents, and then you do your submission of the documents. The review is done, you get a conditional. Normally the conditional approval is, say, perhaps either engage your shareholders to approve this transaction, or meet XYZ, or meet. So you can say you are allowed to list, but subject to meeting the free float or the minimum number of shareholders. And once those conditions are met, we then toast it all with the listing ceremony, and the securities commence trading. And I think this is where I think Crystal was. So we had also prepared a slide on the movement of the funds. So for a local entity, and this is for the primary market. So for a local entity, you will be required to open a Nostro Investment FCA account, and the funds, either from free funds or from offshore funds, will then be credited into that Nostro Investment FCA account. And the funds in that Nostro Investment FCA will not be subject to any restrictions, surrender requirements, and you can hold them for an indefinite period. That's the arrangement that we're actually trying to work with the central bank. And for non-resident companies, you will be allowed to raise funds, either free funds, and there's a definition of what free funds are. I think the statutory instrument gazetted in 2019 that explains that. Offshore, that is from outside the Zim borders, and on the non-resident company, you are then permitted to credit this into an approved. So the keyword, I think, is approved. So you can open an offshore account, but our exchange control has hinted that they would want to approve opening of those accounts for monitoring purposes. And then just a reminder that if you're a non-resident company, you then have to comply with those provisions to reinvest 20% of the funds within the Zimbabwean borders, depending on whether you're coming in as a company listed on ZSC currently, or it's a new company altogether. If it's a new company, we had already indicated that the requirement to reinvest is not required. Just to touch a bit in terms of the continuing obligation. So what then happens once you are in, and it's just one slide, really nothing new in terms of listings requirements. The issuer is to appoint a sponsor, and correspondence with the VFX has to be directed through the sponsor, subject, of course, to that direct interaction that I talked about. So the routine notices, you don't have to go through the sponsor. Also, where there's matters of principle that require discussion with the ZSE directly, you are permitted to, you are permitted to discuss those directly with the VFX. Then general obligation to disclose all material price sensitive information. So listing comes with general obligation that anything that is price sensitive, resignation of a director, the transaction of a significant size, if it's deemed to be material sensitive, it has to be publicly disclosed. So that's a continuing obligation. Periodic financial information, your full year results, your quarterly publications, your half-year publications, those also need to be published. Then the shareholder spread, so you also required on a continuing basis to maintain that free float of 30%. Once you get listed, you are required to maintain, ensure that you've got sufficient number of public shareholders holding your securities to ensure that there's also a secondary market in those securities. Then the relations with security holders, so an entity that gets listed is then also expected to ensure that there are facilities to ensure that there's sufficient exchange of information with holders of their securities. So if security holders have to be notified of an AGM, it has to be done in a way that covers all the security holders. They have to receive that communication, etc., etc. If there's a meeting that is to take place, the security holders have to be notified of the place and the time, and that has to be done adequately. Then for issuers whose securities are listed on another exchange, so these are for dual listed companies that will list, or companies that will dual list on VFX. There's also that requirement that if, assuming our rules are less onerous, but perhaps from the other exchanges where you are listed, they've got more demands than we actually put upon you, the expectation is that you publish the same information that you publish in the alternative market. You also disclose that information on the local market. So where perhaps we say 2 publications per quarter, and in another exchange you're actually publishing 3, the expectation is that at the time that you actually publish on the other market, you also disclose the same information on VFX. So that applies to dual listed entities. And then obviously the payment of the annual charge, and to ensure that you're also aware of what the listing fees will look like. I've put a schedule there, so we have broken it down into bands with a minimum of 2,500 and a maximum of 15,000, and it's dependent on the market capitalization of the entity. So those are the fees that will apply, and these are excluding VAT. I think this will be my last slide. Just to recap, I think the essence is probably why we think listing on VFX makes sense for you. That ability to raise capital in hard currency for retooling and perhaps for working capital purposes, you can actually raise capital. I know people we have heard the sentiments, the concern about the issues of country risk and whether this exchange will be successful. We think we are providing a solution, and our strategy is to make the exchange successful. We think all the exchanges that have been that are successful today probably commenced somewhere. They were not so successful perhaps when they started, but I think, like they say, a journey of 1,000 miles begin with a single step. So we are taking the initial steps, and our vision is to make sure this exchange is quite successful and competitive. So we are quite focused on that. You'll also be able to raise that capital by use of several securities. So our listing requirements that have been approved allow for you to issue debt securities, equity, and ETF. Rates are not your normal type of rate, but going back to that mid-term fiscal policy review, we did note that the Ministry of Finance gave dispensation that institutions can actually be tax exempt if they raise funds to build or to invest in student accommodation, which is real estate. So if you've got a project that you want to work and it's focused on student accommodation, you can actually then bring that and list it as a rate, because the quality of a rate is that it's a tax pass-through. But in terms of the mid-term fiscal policy review, it is also contained in the finance bill, which was circulated recently. Entities that are going to work on providing student accommodation are going to be tax exempt, and that's a structure that can actually attract investors, and it can also be used to raise capital to actually then fund those particular type of projects. So that's the rate that we are talking about. It is unfortunately currently just restricted to student accommodation. Then the tax incentives, which were shared initially, we think those will make it also attractive to investors, and the lower trading fees will also quite be important in terms of liquidity. It also enhances your profile. Listing, I think, enhances your profile, and the lower exchange control risk, we think, is also something of an advantage to an entity that comes to list on VFX. On that note, ladies and gentlemen, thank you for paying attention and listening to this presentation. We can, I think, open it now for further questions if there are any. Tapio, I think I will hand it back to you.
Thank you, Enmo, for the presentation. I think whilst you're presenting, I just have two more questions that came through the chat. Someone is asking, sorry. Okay, will it be a requirement that all IPOs on VFX be underwritten?
The answer to that is yes, they have to be underwritten.
Okay, thanks for that. And then someone is saying, in case of debt instruments, are revenues of issuer ring-fenced to allow repayment or to remove currency risk or mismatch?
Right. So what happens with the debt securities is that the beauty is that the sponsor or the entity actually seeking to raise those funds can put in structures that actually also enhances, you know, the quality of that issue. So issues like, you know, your sinking fund, which then, you know, ring fences some of the proceeds, can actually work. But I would say it's actually up to the issuer to build a structure that enhances that issue and make it, you know, more palatable to the issuers. In terms of the listings requirements, what we only look at is whether the issuer meets, you know, the minimum requirements. Are they going to comply with the disclosure requirements? If it's an issue that requires to be a rating, as the credit rating being made public, etc., etc. But I would say it's up to the arranger of that debt instrument to actually put in place mechanisms to ring fence the funds on and to make sure that it's safer for investors. The exchange is simply there to facilitate, and the facilitation is limited to just guidelines in terms of the listings requirements. But debt securities are quite flexible. You can actually say our debt securities perhaps will be indexed to either your LIBOR in terms of the return, or I'm putting a guarantee, I'm getting a guarantee for this debt security from a third party, etc., etc. So debt securities, their success, I would say, depend on how the issuer and the arranger put it together.
Okay, thanks for that, Enmo. The other question is, given the option to delist on the ZSE and list on VFX, would this not result in ZSE listed companies simply delisting to raise capital in hard currency?
Right, so I think one of the things perhaps that we do not highlight is that it's not straight through or straightforward that you can simply delist on ZSE and then list on VFX. one of the considerations for VFX, and Robert, if he's still around, can confirm, is that you also need to prove that you can pay a dividend in hard currency when you migrate to VFX. Because it's only fair that if someone then invests in hard currency, come dividend time, you should then be able to pay that dividend in hard currency. So that will also probably sort of limit those that are eligible to go on VFX. But like we said, it's not our intention to fish from the swimming pond. Our target is really to get new listings on VFX, but we will not necessarily stop companies from delisting on ZSE and going there. But our target is to really get new listings on VFX. And migrating to VFX is also subject to the company meeting the VFX listings requirements. So it's not like it's an automatic migration.
Okay, thanks for that, Inmo. So for the few minutes that we have left, I'll just open up to the participants. If there's anyone who still has a question, please feel free, you can unmute your mic and then you can ask the question before we close the session. Okay, I noticed that no one has unmuted their mics, so I would assume that, okay, I see there's a new message that has come through. Okay, so I'm sure if you have any other questions, the ZS team is available to assist you. You can email us and we will also share the presentation just after this webinar. Let me also take time to thank our CEO in absentia, Justin, who was here to give us an update on the project, and to Enmo for taking us through the VFX listing process, and also Robert, who was there to assist on some of the questions, and mostly to all the participants that took time to actually come through to the webinar and actually learn more and give us their opinions and also their suggestions on this project that is being undertaken. So I wish you all a good morning and enjoy the rest of your day. Thank you very much for joining and have a good day.
Thanks, Tapio.
Thanks, Tapio.
Hello? Yes? DNW. My unit price is